Okay, so hello there. Continuation and discussion natin about time value of money for the subject capital markets. Okay, so we'll begin this one with future value and compounding. So future value, ito yung sum of money which will be received in the future period resulting from investment. Kaya siya tinawag na future value. Okay, kasi ito yung magiging amount niya in the future, taking into account the interest it will earn. So it is synonymous with the terms terminal value or maturity value. Compounding or accumulation is the process in which future value is determined. Okay, so my example dito. 1 million invested in a 4-year 10% financial asset. What is the future value? So ang present value niya, edi syempre ito 1 million. Ano, kasi yun yung amount na in-invest mo for today. So, on the first year, nag-earn siya ng 10% interest, so 100,000. Future value niya after 1 year is 1,100,000. So, since ito ay compounding, so ito yung magiging basis natin on the second year. 1.1 million times 10% interest rate. Ang interest na may earn niya is 110. So, total niya na value for the second year is 1,210,000. Okay? And then, same process lang, third year up to fourth year. At the end of the fourth year, ang valuation na niya is 1,464,100. Okay? So, at point 0 or the period when the amount is invested, the amount is 1 million. So, yun yung present value. It earns compound interest from year 1 to year 4. And at the end of the fourth year nga, ang value niya is ito na, 1.4 million. Okay? The future value. Substituting FB for MB in the formula for maturity value, we get, diba? If gagamitin natin yung formulang pinrovide in the previous video. So, 1 million principal times 1 plus the interest rate raised to the number of years or number of terms. So, 1 million multiplied by 1.4641. So, yun na. Same lang, diba? 1,464,100. So, the investment is made once, sa simula lang. And then the factor used to multiply the principal with is 1 plus r raised to n, which represents the future value of 1 at the end of a given period. The FB factor is available in the future value table. The factors in the FB table are the reciprocal of corresponding factors in the present value table. So this is because for the FB, we use 1 plus r raised to n, while for the present value factor, we use 1 over 1 plus r raised to n. Okay, kumbaga naging denominator itong part na to. So, if instead of using the formula, we use the FB table, so present value times the future value factor for n periods at the interest rate. Okay? So, yun na siya. Using the FB table, we look at 10% and for year 4, and we get 1.4641. Okay? If you have the table available to you. Pero kung wala, pwede mo naman gamitin yung, calculator mo. What we got when we raise 1.1 to the fourth power. So, future value niya is, 1,464,100. The use of the table makes computations easier, pero pag sanay ka naman sa calculator, carry na din. Okay? Present value and discounting naman. So, present value is the value at the current time of the cash flow expected to be received after some period of time. So it answers the question, how much is the worth today of an amount that will be received in the future. Okay? So normally, yung present value is, tawag dito, mas mataas compared to the value in the future kung same amount lang. Okay? Pero kung ito ay, of course, investment and nag-earn ng interest, so definitely yung future value is mas mataas kaysa sa present value. Okay? The present value is always smaller in quantity than the future amount since we're talking about investments here that earn interest. Okay? For example, how much is the present value of 1 million to be received in 5 years at a discount rate of 5%? So the 1 million is the future value and the 5% is the discount rate. In present value calculations, we use the idea of discounting. Kasi kumbaga, future value mas malaki compared sa present value. So parang kapag available ay yung amount ng future value, so parang dinidiscount mo siya to get the amount of the present value. Okay? The method of determining the present value is called discounting. The rate applied in discounting is called the discount rate. The discount rate is the expected rate of return. Diba? Kapag kasi nag-start ka sa present value, multiply mo siya dun sa rate of return, makukuha mo yung future value. Pero kapag ang given ay future value, gamitan mo siya ng discounting rate, or yun din naman siya, yung rate of return din, para makuha mo yung present value. So the net cash flow could be received in two ways, pwedeng after a number of years, or let's say after 5 years, or after 10 years, or pwede namang annually. Every year may matatanggap na pera, okay, or cash flow. The formula in determining the present value of net cash flow received after a number of years is as follows. Ito yung mas simple, Cash flow, present value is equal to the cash flow multiplied by 1 over 1 plus R, interest rate over, raised to the n, or number of years. So example, if one is to receive a cash flow of 1 million after 5 years, with a discount rate of 5%, its present value is 783,500, computed as follows. So 1 over 1 plus 5% raised to 5 years, so 784. Okay? Kapag ginamit yung present value table, edi tingnan mo lang naman. Pero same na value lang naman din makukuha mo. Ayan, 784,000. Yung net present value na tinatawag, ito naman ay kapag, every year may natatanggap. Okay? The concept of net present value is used in financial decision making, particularly in evaluating investment alternatives. Drawing on the concept of present value, the total present value of all future cash flows is obtained. Deducting the investment or principal needed for the project or investment from this total present value, the result is called net present value. Okay? So, for example, meron kang investment decision, tapos every year, meron kang expected na cash flow na matatanggap. Okay? Pero since yung values na yon ay future cash flows, kailangan kunin mo yung present value niya. At pag nakuha mo yung present value niya, syempre, babawas mo yung amount na nilagak mo dun sa investment. Pag binawas mo yon, nakukuha mo na yung net present value. Okay? If the NPV is positive, the project or investment alternative is accepted kasi parang, profitable, parang kumita ka. Pero kapag negative, ibig sabihin, mas malaki yung cost mo kaysa dun sa cash flows, present value ng cash flows na natanggap mo, the project or investment alternative is rejected kasi malulugi ka lang. Okay? Let us take an investment opportunity to build a housing project. Assume that a land for sale is suitable for the project for 4.5 million. The construction of a townhouse will cost 15.5 million. Therefore, the total project will cost 20 million. Currently, the opportunity cost of capital is 6%. Assume the following scenarios. In a year's time, the entire complex can be sold for 23 million. Okay? After 1 year daw. Second scenario naman, you can rent the project for 4 years at a total yearly sum of 1.5 million. 1.5 times 4, ilan yun? 6 million lang. At the end of the 4th year, you can sell the townhouse to the tenants for cash worth 23 million. Oh, okay. So, have your 4 years na 1.5 million, total of 6. Tapos, mabebenta mo siya for 23 million. Okay? Kasi, bahay lupa to eh. Nag-appreciate normally ang value kapag merong lupang kasama. Okay? Let us take scenario 1. Present value of the 23 million to be received in a year's time. So, ang present value factor ng 6% at 1 year is 0.943. Tapos, ito yung kanyang present value, 21,689,000. Tapos, yung investment required is 20M. So, ang net present value niya is 1.6 million lang. Okay? NPV niya is positive, therefore, we can accept the project. Pero kung pipili ka kung alin ditong scenario, syempre, mas pipiliin mo yung mas mataas ang NPV. Okay? Yung second scenario naman, so yan, cash flow first year, 1.5, second year, 1.5, third year, 1.5, fourth year, 24.5. Yung 23, tapos yung 1.5. Okay? Present value factor for 1 year is 0.943, second year, 0.890, third year, 0.840, fourth year, 0.792. Multiply mo lang yan. Okay? 1.5 million times 0.943, ito yung present value niya. 1.5 times 0.89, ito yung present value niya, and so on. So, yung total present value niya is 23,413,500. Bawas mo yung investment required, 20 million, NPV niya is 3,413,500. Mas malaki. Okay? Pero you have to consider this one, scenario 1, makukuha mo to after 1 year lang. In a year's time. Okay? Pero itong scenario 2, 4 years. Abutin ka ng 4 years before mo makuha itong return na ito. Okay? The NPV is positive and should be accepted. Comparing the NPV for the second option with the NPV for the first option, the NPV for the second option is higher. Therefore, it would be better if the townhouse project is rented out and then sold at the end of the 4th year than selling it after the project is done in the 1st year. Pero kung, urgently needed mo na, edi ito na lang. Okay, pero kung makapaghintay ka, edi syempre, ito tayo. Alright? Ordinary annuity and annuity due naman. Annuity defined as a stream or series of payments made or receipts received over time. Pwedeng, installment. Okay. Layman's term. Annuity problems involve a series of equal periodic payments or receipts called rent. In an ordinary annuity, the rents occur at the end of each period. Okay? Kumbaga, kunwari, nagre-rent ka ng bahay, magbabayad ka sa katapusan na ng buwan. Okay? Nag-start kang magrenta, uno, magbabayad ka sa katapusan. Okay? Ordinary annuity yon. The first rent will occur 1 period from now. In an annuity due, ito baliktad naman, babayad ka na muna. Okay? Bago ka mag-start magrenta, bayad ka na agad, uno. Okay? Tapos, yung kasunod mong renta, edi tuwing uno din. Okay? The rent occurs at the beginning of each period. The first rent will occur now. Most annuities are ordinary annuities, yung sa dulo ang bayad. Installment loans and coupon-bearing bonds are examples of ordinary annuities. Rent payments, which are typically due on the day commencing with the rental period, parang yung, di ba, advance na sinasabi, are example of annuity due. Deposit. Okay? In a deferred annuity, the rents occur in the future. Deferred annuity. A deferred annuity does not begin to produce rents until 2 or more periods have expired. A deferred annuity problem can occur in either an ordinary annuity or annuity due situation. In an ordinary annuity of N rents deferred for Y periods, the first rent will occur Y plus 1 periods from now. In an annuity due of N rents deferred for Y periods, the first rent will occur Y periods from now. Okay? So, itong isa kasi ordinary annuity kaya may plus 1. Yung annuity due, yung Y periods na lang. Okay? So, may example dito. Scenario 2, under the NPB, to use the ordinary annuity table, since the future cash flow during the first 4 years is a series of 1.5 million. A final cash flow of 23 million is received in the 4th year. So, ito, 2 ways. Itong una, present value ng 1.5 received for 4 years. So, 1.5 times the present value of ordinary annuity ng 6% in 4 years. So, 3.465. So, ang present value niya is 5,197,500. Tapos yung 23 million received on the 4th year, present value ng 1, kasi diba, itong present value of 1, ibig sabihin nun, matatanggap mo kasi siya at the end of the period, isang beses lang. Okay? Yung ordinary annuity, kasi nga, every year mo siyang natatanggap. 6% at 4 years, ito, 23 times 0.792, 18,216,000. So, yung total present value niya, 23,413,500 minus the investment required na 20 million. Net present value niya is 3,413,500. Itong ikalawa, 1.5 received for the first 3 years. So, yun yung ginamit niya, for 3 years lang. Tapos, yung the last one, 4th year, sinama na niya, nilamp niya dito sa 4th year. Okay, so 24.5 times 0.792. Pareho lang naman na makukuha mong value dyan. Okay? To illustrate annuity due, let us assume that the 1.5 million in our example is received at the beginning of the year. So, we will assume further that we sold the housing project at the end of the 4th year. So, ang solution natin, magiging ganito naman. Annuity due yung gagamitin. Present value of annuity due for 6% for 4 years. So, yung 1.5 times 3.673 equals 5.5 million. Tapos, yung 23 million received in the 4th year. So, yan, 23 times 0.792. So 18,216,000. Total present value 23.7 million minus the investment required na 20 million. Net present value niya is 3.7. Alin ang mas mataas? Mas mataas to kasi annuity due natatanggap na niya kasi at the beginning of the period. Okay? So, ayan. Take note that the present value of ordinary annuity being received at the end of the year is lower than the present value of annuity due being received at the beginning of the year. In annuity problems, the rents, interest payments, and number of periods must all be stated on the same basis. For example, if interest is compounded semi-annually, then N, the number of semi-annual rents paid or received, I, the annual interest rate divided by 2, and R, the amount of rent paid or received every 6 months. Okay? Kapag merong involved na compounding. The following is a computation for the present value of an ordinary annuity, the present value of an annuity due, and the future value of an ordinary annuity and the future value of annuity due. Okay? So for the present value of an ordinary annuity, 50 pesos per year over 3 years at 7% would be, ganitong formula niya, PMC multiplied by 1 minus 1 plus interest rate raised to, is this negative N, over the interest rate equals 50 pesos times 1 minus 1 plus 7% raised to 3 years divided by 0.7. Okay? So, yan. Paggagamitan nyo ng calculator. The present value of an annuity due would be, ito naman, ordinary annuity ito ay annuity due. So, nasa na? Yung present value niya times 1.07. Okay? So, 140.40 naman. The present value of an annuity due is greater than the present value of ordinary annuity. Kasi again, yung annuity due, natatanggap mo na sa simula ng period. So, in that sense, yung first year niya is may na-earn agad na interest. Okay? Because it is received ahead. Kasi nga, the earlier, the better. Right? That illustrates exactly what time value of money means. Okay? The future value of an ordinary annuity of 25 pesos per year over 3 years at 9% would be as follows. So, substitute nyo lang dun sa formula ulit. Okay? Pag future value, ganito naman siya. 1 plus the interest rate raised to negative N, or negative ba? Or N mismo. Minus 1 divided by the interest rate. Okay? To get the future value. Pag present value, 1 minus 1 plus I raised to N over I. Pag future value, 1 plus I raised to N minus 1. Divided by I, okay? Future value of an annuity due under the same terms is calculated as, okay, future value times 1 plus I, okay? Again, the future value of the annuity due is greater than the future value of ordinary annuity, okay? Differences between the ordinary annuity and the annuity due of N rents deferred for Y periods are as follows. So, kapag first rent occurs, Y plus 1 periods from now. Pag last rent occurs, edi Y plus N. Okay? Pag annuity due, nice ordinary annuity. Pag annuity due, edi Y periods from now. Pag last rent, edi Y plus N minus 1 periods from now. Okay? Future amount is immediately after the last rent. Annuity due, 1 period after last rent. Okay? So we have the chapter summary. Time value of money denotes the value of money over time. Inflation is the reason, okay? The economic disorder characterized by continuous increase in the prices of goods and services without the corresponding increase in supply, okay? There are two basic types of measurement of interest, simple and compound. Formula used to determine maturity value, principal times 1 plus interest rate raised to N, or the term, or number of years. Future value is the sum of money which will be received in the future period resulting from investment today, taking into account the interest it will earn. Compounding or accumulation process in which future value is determined. Okay. Present value, value at the current time of the cash flow expected to be received after some period of time. The formula in determining the present value is as follows. Present value equals cash flows times 1 over 1 plus the rate of interest raised to N, or the number of years or period. Net present value, difference between the total payment total present value of all future cash flows and the investment or principal. Okay. Annuity, stream or series of payments or installments made or receipts received over time. Annuity problems involve a series of equal periodic payments or receipts called rents. In ordinary annuity, the rents occur at the end of each period. The first rent will occur one period from now. In an annuity due, the rents occur at the beginning of each period. In a deferred annuity, the rents occur in the future. In an ordinary annuity of N rents deferred for Y periods, the first rent will occur Y plus 1 periods from now. Pag annuity due naman of N rents deferred for Y periods, the rent will occur Y periods from now, the first one. Okay? So, ito yung mga formula niya. Present value of ordinary annuity, present value of annuity due, future value of ordinary annuity, tapos you have your future value of annuity due. Okay? So, dito lang nagtatapos yung ating discussion ng time value of money. Alright? So, that's it for this one. Thanks and bye.